Okay, is it Itumeleng or Kat?
Itumeleng.
Or can you please private message me because I don't have your number?
Sure.
Okay, thank you so much. I'll start now then. Good morning, grade 10s. Welcome to our business studies class. Grade 10s, today we are still looking at forms of ownership. Today we are closing off the chapter. Welcome to those who are just joining us today. On our 9th lesson, I'm Hector S. Nkosi and I'll be taking you for business studies. Now, grade 10s, you have dealt with your forms of ownerships. We did forms of ownership since from the 1st of July up until today. Today, we're looking at the last part of forms of ownership. Today, basically, we're looking at this. We're looking at the different types of cooperatives. We'll also be looking at explaining or discussing or describe the advantages and disadvantages of cooperatives. We also be looking at selecting at the best form of ownership and justify the reason for selection. So this is what we are left with. So we have dealt with so many things, guys. We have dealt with a number of different types of form of ownerships. I taught you how to identify forms of ownership. We've started with a sole proprietor. We then moved to a partnership. We did a close cooperation. We did a personal liability company. We did private companies. We did public companies. We did a lot of things. We also did the differentiating different types of ownerships where we compare different types of ownerships. We did compare a sole proprietor and a partnership. We did compare partnership and a close cooperation. We did compare public company and private company. We did compare a personal liability company and a private company. So we did a lot of things basically, boys and girls. So you need to be able how to do those things and you need to be familiar with what you need to do because in an exam they can give you anything. So please make sure that you understand as today we're closing off the chapter. It's a huge chapter and it's one of the important chapters in grade 10. You'll never ever finish your business studies assessment or test or an exam without an examiner asking forms of ownership. It's very important for you to know your forms of ownerships. You'll be tested them a lot in your syllabus this year. In grade 11 and grade 12, they also do ask forms of ownership. So you must know their characteristics, you must know their disadvantages, you must know the comparison between other forms of ownership and what are the advantages, what are the good things of having this, and what are the downfalls, also the disadvantages for each type of a form of ownership. All right. Now, today I want us to revise on your SOE before we move to our today's thing. Okay. I just want to touch base on state-owned companies, just to revise them. I know we've dealt with them on last week, Friday, basically, but I just want to revise the state-owned before I can start our cooperatives. So remember, guys, your state-owned company, I need my highlighters as usual. Okay. Remember, boys and girls, that your state-owned company, it is a state-owned company that has the government. So basically, it's the company that has what? A government. Sorry. Oh, sorry. I don't know what I'm doing. Right? So a state-owned company has the government as its major shareholder and falls under Department of Public Enterprise. So the major shareholder, it's the government. Therefore, if the major shareholder it's being regarded as a government, therefore it will be your state-owned company. These companies take on a role of a commercial enterprise, right? So now, since you've got these company take on the role of commercial enterprise on behalf of your government, basically, right? Characteristics of your state-owned companies. You just need to know that your state-owned company, the name ends with the letter SOC. Basically, then that thing will be regarded as a state-owned company. SOC is listed as a public company. Very important. It is listed as a public company, which means it uses what? The requirements of a public company. And we all know that all public companies must register through the Johannesburg Stock Exchange, or JSE. One or more persons may incorporate, and there is no limit on number of shareholders. So there is no limit on number of shareholders. Sorry. So no limit on number of shareholders. It requires 3 or more directors or 1 shareholders. Also, it must register with the registrar of companies by drawing up the MOI. We know what the MOI is by now. Also, a state-owned company, how do you see it? State-owned companies must support private businesses by providing infrastructure such as communication services, post office, and supply electricity or ESCOM. Also, your state-owned company, boys and girls, it enjoys financial autonomy because they depend on government for initial investment. And also the act imposes personal liability on directors who are knowingly part of the carrying on the business in a reckless or fraudulent manner. Then more of your state-owned company is that the company is compelled to have each financial statements audited. So it's a must under state-owned company. It's more of like a public company. The only difference about the state-owned company is that its majority shareholders are government, but it's the very same thing as your public company. Majority of the characteristics are public companies characteristics. Also, a state-owned company is compelled to attend the AGM. Even in the public company, we are compelled to do the AGM. A state-owned company has separate legal personality and have limited shareholders and limited liability, same as your public company. And these are your good things about your state-owned company. We know that the shareholders have limited liability. Profits may be used to finance other states' departments, offer essential services which may not offered by the private sector. We know that we need to wasteful duplication of service is laminated. Jobs are created for all skills level. That's a good thing. So it generates income to finance social programs. So prices are kept reasonable or create sound competition with the private sector to make service affordable to more citizens. We know that the planning can be coordinated through central control. Also, you provide a healthy competition to private sectors because of government. Most of the government companies run on sound business lines as like guys, they have their own surpluses on run their projects. We also know that state-owned company can be expanded by means of selling shares to the public, right? So it can be expanded. So can you see? It's the same principle as your public company, basically. A state-owned company is a separate legal personality, right? Right. Now, let's look at the bad things when it comes to your state-owned companies. We know that is it inefficiently due to the size of the business. Financial statements must be audited. That's a bad thing. It may be a disadvantage because the more you audit your financial statement, the cost you incur, the more cost you incur. Because if your financial statements are being audited, you must pay auditors' fees. Losses must be met by the taxpayer. The government can lose money through the business of which to avoid the state. I mean, it will infect or it will affect the state. Meaning, because should the government lose money, the state will be affected also. Shares are not freely tradable, make it difficult to raise capital. So the only thing in the public companies, shares are freely tradable. But here in a state-owned company, they are not, right? So the lack of intensive incentive for employees to perform if um, there is no absence of other motivators such as productivity bonuses, a lack of incentive for employees to perform if there is no share in profit. Um, so that may result in poor management as the government is always as efficient as private sector. I mean, it's not always. We know that government is not always. Government is not always efficient as a private sector. So that may result to a poor management. Often rely on government subsidies, which may not cover all companies' expense. Your state-owned company must follow strict regulations for operations to raise capital because we're under government. Also, a state-owned company is compelled to attend an AGM, of which is more admin, since we have to attend your annual general meeting. Also, the bad thing about the state-owned company is that it's compelled to have its financial statements audited. So that can be seen as a disadvantage because, as I said to you, the more you audit, the more your financial statements are audited, the more expense you incur because you have to pay your auditors' fees and stuff like that. Now, our main focus for today, I was just recapping from Friday. Our main focus for today is our non-profit company, our NPO, right? So, boys and girls, what you need to know about our NPO, a non-profit company or NPO is not formed to do what? With intent to make a profit, but established for public benefit, right? So when we look at our NPO, are those companies, boys and girls, that we find in our sectors where they just raise funds to help the public, just giving back to the community. We speak about those companies where they're not making any profit. uh, them is to raise funds, maybe to give people bursaries, to raise funds, where to help the needy people in terms of food. We know that sometime next week, actually this week on Saturday, it's Mandela Day. That's where we're going to see most of our NPOs helping out during the 67 minutes. They'll be painting your child welfare, they'll be giving out. Uh, sorry guys about that. I had a technical issue. All right. So now I was still explaining your nonprofit organization company or your NPO. We know that this is not for us to make profit, but to establish for public service, for public benefit. I made an example that we do have a 67 minutes since there's Mandela Day on Saturday. You'll see majority of your NPOs will be coming in to help the needy ones. Sometimes it's other kids, they do get bursaries through your non-profit companies basically. And now how you your characteristics of a non-profit company is that the aim is to provide service and not to make profit, right? So the aim is to not make a profit, right? Not, sorry, I just want my cursor, is to not make profit. They are funded by donations and foreign funding. So basically, how are they funded? Where are they taking money to help the needy? Uh, Basically, they write proposals to different public companies and private companies to seek for funding. Um, Also, there are donors there. Sometimes they ask money from foreign countries where we regard that as foreign funding, basically from overseas. Your well-developed countries, they do approach them and stuff like that, you know. So you must know that where is the money coming from your non-profit company. Also, you know that your non-profit company ends with your NPC, meaning it's your non-profit company. And all profit must be used for the primary objective of your NPO, NPC, I mean to say, right? It must prepare the MOI. So even though it's a non-profit company, it must have all the MOI, right? So it must have the MOI, even though they are not making any profit, basically, right? Also, the qualifying non-profit companies are granted a tax exempt status, which means they are not paying tax. So your NPC is not paying tax or it's not subjected to tax, basically. Also, the other thing that you need to look at, the board of non-profit company must comprise at least three directors or more, three or more. So it must have at least three directors or more, right? So it's very important. NPC companies do not have a share capital and cannot distribute shares by or pay dividends to their members. So here, guys, remember, we're not in a scheme of making profit. No wonder we can't issue shares to the public or shareholders. And if we don't issue shares, therefore, we don't have any dividends. Now, let's look at the advantages. Sorry, let's look at the advantages of your what you call of your NPC, right? We know that their profits are used solely for primary objective of the organization. Also, they provide social services to various communities. Donors receive tax deductions, which means what are donors are the people that donated to this NPC, so they receive a tax deduction. The liability of the members is limited, very good. Has a legal personality and continuity of existence, can receive grants or help, meaning grants from the government. Surplus of income is retained to further the goals of the business. So if there's any surplus income, it must be kept to further the goals of the business. Meaning, let's say we've got a plan and we know that okay, we need to help 1, 2, 3, 1, 2, 3. But let's say in that year we did not use all of the money. Whatever is remaining, it must be retained for further or future goals of the business. And it must prepare its financial statements at the end of the year and is not compelled to audit its financial statement. Here, there is no auditing. It's not a must to audit your financial statements, right? Also, non-profit companies are not compelled to attend the AGM. It's not a must also to do your AGM. Now, let's look at the bad things when it comes to your public company. I mean, to your non-profit companies. We need professional assistance to set up this organization. Remember, guys, if you're starting a public company, you need professional assistance because you'll be dealing with different people, because you'll be helping, you'll be raising funds. So you need someone who's going to draft a proposal to you because you can't just go to people and say you need money because you are helping the nation. So you must have everything into detail, like what is your problem, why do you want to help the nation, um, what is your plan, what is your goal, or, like what is your plan of helping out the nation, you know. what is the nation going to benefit from this? Why are you doing it basically? So you need professional assistance in order to approach donors, right? It does not generate enough capital to cover their expenses. So sometimes it happens, guys, that not always you're going to get the funding. Sometimes you might get the minimum funding from your donors, right? Or your sponsors. Sometimes that can restrict you of not paying companies' expenses. As this second line says, that donations may not always be enough to finance the company's expenses. So sometimes you can have the money that you can all go help the needy people, but you as a company, you can't pay for your water and electricity. Um, you can't pay for the maintenance of the building where you guys are working. You can't pay for your depreciation of the machines, printers, and the furniture and stuff, right? So also another thing is assets are not distributed to members upon the closing down. So basically, if this company had to close down, if you were owning a printer there, laptop, it does not belong to you when uh, when you are closing down. Creating a non-profit company um, takes time or effort, money. Obtaining grants can be slow and tiring. It can be slow, guys, because sometimes I'm telling you, since we facing Corona, I'm telling you, majority of the non-profit companies are struggling right now because majority of the people they do not have money. Um, During level 4 and level 5, country had to shut down. Majority of the company did close, so they were not making any income basically. So now what I'm trying to say is, um, basically to obtain grant, it can be slow and tiring process. So not always you're going to get, especially in times like this, your COVID times, it's just difficult for your non-profit companies to get money. Also, your incorporators cannot take long, uh, cannot take along the assets accumulated by the NPC if they are to leave. They are allowed to pay bonuses to their members. So members are entitled to bonuses. They are compelled to prepare annual financial statements. That's another bad thing, that it is a must. It is a must to do financial statements, but it's not a must for those financial statements to get audited. But it is a must to have the annual financial statements. But on whether they should be audited or not, it's not a must. All right. Now let's look at another form of ownership, the last one for today, basically, your cooperatives, basically. What are your cooperatives, boys and girls? Cooperative is a traditional way of group of interested parties getting together, sharing resources, infrastructure, and costs to achieve a better outcome. So types of your cooperatives, we've got a housing cooperatives, we've got worker cooperative, we've got a social cooperative, agricultural cooperative, cooperative burial society, your financial service cooperative, your consumer cooperative, and your transport cooperative. Remember, what is the thingy? The group. So it's a group of interested parties getting together and sharing resources, infrastructure, and costs to achieve the outcome. So those are your cooperative. Now, I'm just want to make an example on your uh, cooperative burial society. We know, guys, other people, they've got a burial society. That's a cooperative, basically, guys, because the aim is to help one another. If, let's say, one of your family member dies, you know that you can always the burial society can always help you to bury one of that family members, because it's a society. Remember, society, you deposit money maybe once a month, you pay your premiums and stuff like that. So that will be regarded as a cooperative also. Now, let's look at the characteristics of your cooperatives. So now, your characteristics of your cooperative, we need to know, boys and girls, that it has a minimum of 5 members and is required to start a cooperative. So it must have more than 5 people, right? So it cannot be 4 people, cannot be 3. but it can be 5 people going upwards, right? The word cooperative limited must appear at the end of its name. So how do we see a cooperative? We must see what? We must see the word cooperative limited, right? Uh, so they are motivated by service rather than profit. So basically their main thing is to offer a service, right? So they are motivated by the service rather than a profit, right? They are managed by a minimum of 3 directors. So they must be managed by a minimum of 3 directors, right? Decisions are taken democratically, right? So, which means there's a voting that takes place. There's a voting when it comes to decisions. So, it's democratic. Sorry, guys, my bad. Democratically, basically, right? So members own and run businesses together and share equal in its profit, basically. Like a rural society, there must be a decision that we make should someone dies, and we need to agree on what money do we need to pay out should someone die and stuff like that. So if we contribute 10,000 upon the burial, the burial of that person, everyone will be entitled to 10,000. Not to say person A will get 10,000, person B will get 12,000. No, if we said everyone is subjected to 10,000, upon the burial, everyone will get the 10,000, not different amounts. Also, legal entity and legal entity and can own land and open bank accounts. So they have to open bank accounts so that they can put their monies there and stuff like that, right? Also, they must register with the registrar of cooperative society. Basically, the object of a cooperative is to create mutual benefit for the members, which means what you get, I must also get. That's your mutual benefit. Now, let's look good things about cooperatives, right? So, boys and girls, with your cooperatives, basically, you must know that the good things about it, you access to resources and the funding, the decision making by group, right? Because sometimes when you are solely alone, you can't make good decisions. But if you have a group of people, I mean, um, they said so many people think alike, or great minds think alike, or the more the merrier, basically, right? So the decisions are democratic and fair. Very good. That's an advantage. Cooperatives have a continuous existence. So even if some of the members can drop or die, but it will continue forever as long as it was established fairly. Profits are shared equally amongst the members. Each member has an equal share in the business. A cooperative can appoint its own management. Members are motivated because they are working for themselves. They can gain extra capital by asking its members to buy shares. This is an option though. Resources of many people are pulled together to achieve common objectives, right? Also, it's difficult to grow a cooperative. It's difficult for a cooperative to grow, right? Because you need to recruit and stuff like that. The shares in a cooperative are not freely transferable. Also, another thing that you need to look at are very few promotion positions for staff. Decisions are often difficult to reach and time consuming because it's more of democratical. We need to vote. There's a first round, second round, and stuff like that. It can be difficult to get a loan because their main object is not always to make profit, but is to offer the service so that every member can benefit. The success of cooperative depends on the support of the members. So that's another disadvantage. If the members are not putting in the money or they're not doing well, therefore that cooperative, it won't work out. Also, all members have one vote regardless of the number of shares held. So you can only vote only once. It doesn't matter how many shares you have, basically, boys and girls. Right. All right. Boys and girls, I hope everything makes sense and I hope you do understand what we dealt with today. And for the rest of last week, and that other week, a week before last, when we started on the 1st of July. Today, boys and girls, we actually finished forms of ownership chapter. So you must know from part 1 up until part 9, our ninth lesson was to finish off partnerships. By now, boys and girls, you need not partnerships but forms of ownership. By now, you need to be able to identify any form of ownership. You need to know, in order for me to do a sole proprietor, what I need to do, what are the good things, what are the bad things. In order for me to do partnerships, what must I look for? Companies, public companies, private companies, state-owned companies, personal liability companies, your state-owned companies, basically, your non-profit companies, your closed corporations. You need to know all these things. Your cooperatives also very important. So by now, boys and girls, you need to be familiar with this chapter. Tomorrow we are starting a new chapter, or in fact, we'll be doing a revision because next week you are writing a formal assessment, basically. So the whole of next week we are doing, the whole of this week we will be doing a revision, and you'll be tested based on forms of ownership. So please make sure that you do attend, you do tune in from my side. Thank you so much, guys. Have a lovely afternoon. Goodbye.